Hi friends, and welcome to another video of Just Being Honest. In today's video, we're going to look at iFast third quarter 2021 results and also their 5-year plan they have just unveiled. So before we look on into those details, let us look at the share price of iFast. So currently looking from a year-to-date perspective, iFast share price has grown from $3.27 all the way right now at $8.72. And this is an increase of 169% in just a 10 to 11 months period. So this is quite impressive. And now let's look at the third quarter 2021 results for iFast. And right here we have the third quarter 2021 presentation results. So from this summary, we can see that the group asset under administration have recorded an increase of new record reaching 18.38 billion as of 30th September 2021, which is a growth of 46.1% on a year-on-year basis and a 27.2% on a year-to-date basis. The assets under administration of unit trust, its key investment asset class, grew to a record 13.46 billion, a growth of 39.5% year-on-year and 23.5% year-to-date. As a result of the increasing asset under administration, the group's recurring net revenue has continued to grow at a robust pace, increasing 29.7% year-on-year in third quarter 2021 and 32.7% year-on-year in 9 months 2021. And then at the bottom box, you can see that the group's net revenue grew 38.1% year-on-year to 84.99 million in 9 months of the 2021, while its net profit grew 63.6% year-on-year to 23.43 million in 9 months 2021. This reflects the positive operating leverage of the group's business model. Its profit before tax margin, based on the net revenue, increased to 32.7% for 9 months 2021 compared to 29.6% for the whole 2021 year. So this is a chart of how the assets under administration has grown for the business itself. You can see that it's been growing consistently over the years from the year 2000 all the way to September 2021. And you can see that the breakdown between the B2B and the B2C, where the B2C part has been increasing quite rapidly. And this is a breakdown based on the country and also by the products. So for the country-wise, you can see that Singapore takes up the majority at 70.8%. The second largest comes in for Hong Kong at 16%, and then Malaysia comes in at 9.2%. And based on the assets under administration breakdown by products, you can see that unit trust takes up the lion's share at 73.1%, stocks and ETF takes up 16.8%, and the cash account takes up at 5.4%. This is a breakdown based on the recurring net revenue and the non-recurring net revenue. So you can see there's been an increase in the recurring net revenue at a much faster pace compared to non-recurring net revenue. This is due to the volatility of the non-recurring revenue involved. And you can see for the 9 months of 2021, the recurring net revenue is almost in the same amount as the whole year for 2020. And here's a breakdown by the geographical segment based on the country type. You can see that over the years, Singapore has been increasing at around 17%, 13%, 6%, 34%, and for the 9 months of 2021 at 36.9%. And for the Hong Kong market, it has been increasing at 24%, 32%, 17%, 15%, and 30.9% for 9 months 2021. For the Malaysian market, it is increasing at a quite high rate of 50%, and then it went down to 12% in 2019, and then it went up again at 2020 at 43.2%, and for the 9 months of 2021 at 56.6%. For the China market, it's quite volatile. As you can see, it started at 83.4%, 73%, negative 24.1%, went back up again at 210%, and then now it's at 69.5%. And at the group overall level, it has been increasing at 21%, 20%, 9.4%, 31%, and now just for the 9 months of 2021, it has increased to 38.1%. And this is a breakdown for the third quarter 2021 versus third quarter 2020 for a year-on-year basis comparison. The revenue has grown by 23.4%. Net revenue has increased by 32.6%. Profit before tax has increased by 24.3%. And profit after tax also increased by 23.4%. So you can see this is a group level breakdown by the annual year. And here you can see that the revenue has been increasing steadily over the years, and same for the profit before tax as well. So this is the profit before tax margin for the group based on the net revenue. And it's always good to see that the margin is on an increasing manner. This shows the operating leverage where the increase in the revenue will lead to increasing margin as well, because due to the fact that the cost is able to remain relatively stable. So for the net cash position, right now iFast is in net cash positive, which means he has no bank loans and then he has purely cash. So you can see that the gross to debt equity ratio is at 0%, which means he has no debt compared to his equity. And now let's look at iFast FiveYear Plan, which I find it to be the most interesting out of the whole presentation, because this will dictate what is iFast plan ahead and what they are planning to achieve. So from the first point, you can see that iFast aims to get bigger and better as they work on the scale and quality of its fintech wealth management platform in the various markets in line with the group target AUA of 100 billion by 2028. This basically means that by the year 2028, iFast aims to grow its asset under administration by another 80 billion within the next 7 years. Looking at the second point, it shows that they also want to accelerate Hong Kong growth, where they probably feel that Hong Kong is a much better place to grow the business at a much faster pace. So substantially, they accelerated the growth of the group's overall Hong Kong business as it effectively executes its ePension business in Hong Kong and continues to improve on its existing platform capabilities. For the third point, more licenses. So iFast aims to pursue more financial licenses in different jurisdictions and make strategic investment in adjacent fintech capabilities, while ensuring that wealth management will remain as its core services as a progressive fintech player. And for the fourth point, iFast aims to be a global business model where it makes tangible progress towards the group vision of being a top fintech wealth management player with a truly global business model which will be even more scalable. So for the group's FiveYear Plan, which is get bigger and better, so what they'll be focusing on all these years is to ensure that it continues to make progress as a fintech wealth management platform in all the markets that it operates. And then they will continue to work on increasing the skill and quality of its platform for both the B2C and the B2B segment. So the B2B segment will include its in-house wealth advisory division, the iFast Global Markets. And the group remains committed to achieving its AUA target of 100 billion by 2028. This will imply a compound annual growth rate of 27% from the group's current AUA of 18.38 billion. So they aim to grow their AUA by 27% every year. So the group will also work on enlarging its overall fintech ecosystem and ensuring that its business model is scalable, capital efficient, and derive the majority of its net revenue from recurring income. And this is why they will aim to focus more on the recurring income, as it will provide a base that's stable for them while they explore new opportunities ahead. So for the accelerating part of the Hong Kong growth, so what they will be looking to do is accelerate the growth of its overall Hong Kong business in the next 5 years, particularly in 2024 and 2025. So the group expects its existing fintech wealth management platform business to continue to grow, while the new ePension division will start contributing substantially to the company in the year 2023 and 2024. The group ePension division will involve operation and administration services for the MPF scheme, main contributor, as well as ORSO, Occupation Retirement Scheme Ordinance Scheme. A substantial part of the group resources will be invested into ensuring that it can effectively execute its ePension services efficiently with minimum efforts. The ePension division will not add to the group AUA numbers, but it will be providing a strong recurring services fee to the group. And this is the guidance that they provided on the Hong Kong targets. So for the purpose of comparison, the group's overall Hong Kong business achieved the following in 2020 and the first 9 months of 2021. So for gross revenue, it will be 251.5 million Hong Kong dollars in 2020, and it was Hong Kong dollars of 214.9 billion in 9 months of 2021. Then the net revenue was 106.5 million Hong Kong dollars in 2020 and 106.6 billion Hong Kong dollars in 9 months of 2021. And the profit before tax margin based on net revenue is 30% in 2020 and 35% in 9 months of 2021. So this is what they aim to achieve in the year 2024, which is a gross revenue of more than 1 billion Hong Kong dollars in 2024 and more than 1.5 billion in 2025. For net revenue targets, it will be Hong Kong dollars of 800 million in 2024 and 1.2 billion Hong Kong dollars in 2025. And as well for the profit before tax margin, based on net revenue targets, it will be more than 15% in 2024 and more than 33% in 2025. Regarding more licenses, the group believes that the fintech business in more countries around the world still is in infancy stage, and clear long-term planning is needed to survive and thrive in the fintech and financial world in the next 10 years and beyond. So they see that the successful fintech businesses need to have the ability to combine the technological capabilities and agility of many fintech startups with several of the strengths of traditional financial institutions. So the key strengths of many traditional financial institutions include having the right suite of licenses and demonstrating the ability to run profitable and sustainable business models. So the group core business will continue to be a fintech wealth management platform. However, to ensure that iFast remain a progressive and competitive fintech players and to improve overall user stickiness, the group see the need to develop some services adjacent to wealth management. So the group aims to be pursuing more financial licenses in different jurisdictions and make strategic investments in adjacent fintech capabilities. One of the services that's closely linked to wealth management is digital banking. This is illustrated by the fact that most countries around the world, the biggest distributor of wealth management platform products are the banks. So the group would like to have digital banking capabilities in one or more jurisdictions and will therefore continue to pursue digital banking licenses. This is seen when they were pursuing the digital banking licenses in Singapore and right now also in Malaysia. So another example of a service that's adjacent to wealth management is a marketplace for bonds. A marketplace for bonds will have clear business proposition given that unlike stocks, there is no bond exchanges, especially for individual investors. So operating a bond marketplace will require a recognized market operator license, and accordingly, the group is in the midst of applying for such a license. And the group will be giving updates on its pursuit of different licenses in different jurisdictions at appropriate times. And the next thing is that the iFast aims to be a truly global business model. So the internet has brought about many different new business models, including truly global business models that are far more scalable and competitive on a global basis. Truly global business models are those that can operate from just one or a few countries but serve customers from around the world. Truly global business models have emerged from many industries such as media, e-commerce, music, and video streaming. In the fintech wealth management world, truly global business models have not emerged in a big way. However, iFast believes that in the next 10 years, some of the most competitive and scalable wealth management business models will become truly global fintech wealth management platforms. And iFast believes that the future of wealth management is one where more investors from emerging markets will be looking for the best wealth management platforms across the world that can provide them seamless access and connectivity to global products and global exchanges, including the US and China. So in the next 5 years, iFast targets to make tangible progress towards the vision of being a top fintech wealth management player with a truly global business model focusing on helping investors invest globally and profitably. And to achieve this, iFast will need to continuously work on expanding its global fintech ecosystem and improve on the overall global connectivity while being fully compliant with the regulations and compliance requirements of various jurisdictions. So this is overall the summary of the iFast FiveYear Plan. So overall, I'm quite optimistic of what the business is trying to achieve in the next 5 years ahead. And I believe that with the management in place and the results they have achieved based on their track record, I'll be looking forward to see what iFast is able to achieve in the next 2 to 3 years and whether they'll be able to achieve the plans that they have set out today. And thank you for watching the video. Hope you learned something new today. Do always remember to make smarter financial decisions every day and have a great day ahead. Bye-bye.